This presentation is about the Report to Parliament, Results of Audit, Internal Controls Systems, 2014-15. The report summarises the results of our evaluations of the systems of financial control and our selective testing of the internal controls that operated within the 21 government departments during the 2014-15 financial year. This year, we scrutinised the effectiveness of internal financial management reporting in greater depth. We also examined the disaster recovery planning used in 4 departments to recover their computer systems after a disruptive event, such as floods or power outages. As part of our annual financial statement audits, we assess each entity's control environment, and key internal controls are assessed for capacity to prevent and detect errors that may result in a material misstatement of the financial statements. We categorise controls into components which make up an integrated internal control framework. Our assessment of the effectiveness of those controls influences the timing and extent of our audit procedures. This year, there was a decline in the number of control weaknesses we identified. This points toward the strengthening of systems of financial controls. This is a positive result that lowers the risk of error and fraud occurring or remaining undetected. Most departments have actively reduced the risk of material misstatements. We found 44 control deficiencies in our 2014-15 audits of departments, representing 3 broad themes and opportunities for improvement. Number 1, inconsistently applied controls. Controls not being applied consistently to all transactions, which they are designed to cover. This reduces the effectiveness of the control in preventing or detecting misstatements. Number 2, information system weaknesses. Information system weaknesses relating to user access management. These weaknesses increase the risk of users having access to system functions beyond their work requirements, enabling the users to modify system data inappropriately and perpetrate fraud. Number 3, monitoring and review of payroll. Inadequate monitoring and review of payroll information such as salaries, allowances, timesheets and overtime. This increases the risk of incorrect payments made to employees, inaccurate employee entitlement balances, and fictitious employees. We also undertook a comprehensive review of the key processing controls at Queensland Shared Services, also referred to as QSS. QSS facilitates a range of corporate services for 19 departments, including finance and payroll processing. We assessed the QSS control environment as being effective, with 28 of its 29 internal control objectives being met. The control objective relating to managing privileged access was not achieved. Management has agreed with our audit recommendations and has plans to remedy all issues within reasonable time frames. Information systems security remains an area of key audit concern and requires dedicated management attention. 30% of overall control issues identified were information systems issues, compared to 28% in 2012-13 and 27% in 2013-14. The main security weaknesses identified were inadequate review of system user roles and their activities, management of privileged accounts, including restricting access to these accounts and monitoring of account activity, users having inappropriate access to sensitive or restrictive transactions, and vulnerability to external attack from the internet. Overall, departments have established management reporting practices that ensure the right information is provided to the right people at the right time. This allows managers to track performance and make informed decisions to achieve the department's objectives. The opportunity exists for departments to improve efficiency in collection, analysis and presentation of information through 1. Embedding a continuous review approach to reporting practices to ensure that they remain relevant, efficient and effective. 2. Investigating modern technology solutions to aggregate and integrate legacy system information. And 3. Using dashboards to combine and visualize key financial and non-financial performance data. After the 2010-11 Queensland floods and the 2014 World Leaders Summit in Brisbane, or the G20, we expected to find departments improving or having a mature capability to prepare for or recover from disasters. However, we found notable gaps in the readiness of 2 of the 4 departments we reviewed to recover from a disaster based on their level of planning. 2 departments have IT disaster recovery plans that are based on a business impact analysis, define roles and responsibilities, and are reviewed and tested annually. However, one of these departments does not have formal processes to ensure their third-party infrastructure provider performs regular testing. Not all of the business units in the second department specified the maximum time to recover the IT systems. The remaining 2 departments do not have complete, up-to-date, approved and tested disaster recovery plans. There is no assurance that these departments will be able to recover their information within acceptable timeframes for a disruptive event. There were 6 recommendations for all departments in relation to IT disaster recovery planning. The key focus for management should be to ensure that IT disaster recovery plans are regularly updated and tested to allow for technology and operational changes. A constant drive for improvement should also be planned. In accordance with our Strategic Audit Plan 2015-18, we will focus on organisational structure and accountability for the general government, education and health sectors in 2015-16. We are keen to assess the tone at the top in this review. We will continue to assess disaster recovery planning at each agency as part of our financial audits. Improvements noted and any outstanding issues will be reported in the 2016-17 Results of Audit Internal Control Systems Report. Overall, there are still various improvement opportunities for the internal control systems across government departments. I trust that this presentation has been of value. The full report can be found on the Queensland Audit Office's website. Thank you.